Ladies and gentlemen, welcome. I'm your host, Junior Roberts, Investment Advisor. Thank you for joining us for another investor briefing. Today, we will be looking at Mayberry Jamaican Equities Q4 year-ending 2023 results. On the panel, we have Chris Berry, our Executive Chairman, alongside Investment Manager Representative Gary Peart. Welcome, everyone. If you're a fan of the content, don't forget to subscribe. Also, hit the bell to stay up to date with the channel. We upload content just like this once a week. If you want to embark on your investment journey, take the first step with Mayberry. Follow us on social media to learn more about how you can get started today. Let's begin the discussion. So we're presenting the final results for MJE Q4. So on screen, you're seeing the financial results for Q4 MJE. Total assets increased over 2022 by 0.6%, resulting at $24.5 billion. Total equity to shareholders had a decrease over 22 by 12.5%, resulting at $17.3 billion. Our net book value per share had a 12.5% decrease over 2022. Our closing share price had a 24.4% decrease over 2022, closing at $9.95 per share. Our earnings per share had a 148.2% decrease over the year 2022, resulting at $2.04. And our total comprehensive income had a 149.1% decrease year-to-date over December 2022, closing at $2.4 billion. On screen, you're seeing the summary of the changes of the statements on our comprehensive income. Net operating income had a loss of $253 million. Our total operating expenses had a 12-month decrease of 55% by $263.6 million, and a quarterly reduction by 6.4% by $179.8 million. For the 12 months ending December 31st, 2023, the net operating income amounted to $2.2 billion in loss compared to the net operating income of $5.6 billion of the similar period in 2022. Dividend income was higher by $56.2 million or 10.2% based on the dividends declared by investees. For the quarter ending December 31st, 2023, dividend income totaled $95.2 million at similar levels when compared to the prior year's quarter. We're now looking at the statement of financial position. Total assets at $24.4 billion, or total liabilities for the same period were at $7.1 billion. Our net book value per share is at $14.40. Total assets as of December 31st, 2023 were valued at $24.5 billion. This represents a 0.6% increase from the $24.4 billion reported as of December 31st, 2022. The $140 million Jamaican dollar increase was mainly attributed to a 38.6% increase in investment securities, or $2.3 billion on account of net acquisitions to the portfolio. Mayberry Jamaican Equities Limited capital base continued to be strong, closing the quarter with $17.3 billion in shareholders' equity compared to $19.8 billion for Q4 2022. This was attributable primarily to the decrease in retained earnings for a 12-month period by $2.5 billion Jamaican dollars. On screen, you're now seeing our top 5 additions and disposals. We can see a significant addition here in Express Catering Limited, ECL, at $18.8 million. And the major disposal here is of Carib Cement at $3.5 million. We'll have Chairman and Mr. Peart have discussion around what were the decisions on the other additions and disposals over the quarter. On screen, you're seeing the top 10 largest holdings, and we know our investors are usually interested in seeing what positions our chairman and Mr. Peart choose to take a stake in for MJE. So we have SVL here at 54.8% compared to 2022 at 60.7%. CPJ at 8.2% versus 2022 at 10.8%. Jamaica Broilers at 7.8% versus 3.7% for the prior period. Wheaton is at 3.7% versus 3.5% for the same period last year. And NCB now has a 2.9% stake for this quarter. And we'll discuss the rest in the question and answer segment. On screen, you're seeing our net book value and share price. The net book value per share decreased by 12.5% to $14.40 as at December 31st, 2023, compared to $16.46 for the corresponding period in 2022. MJE's stock price closed at $9.95 on December 29, 2023, decreasing 24% over its price of $13.16 at December 31st, 2022. On screen, you're seeing a graph that clearly demonstrates that MJE is trading below NAV, and for savvy investors, this is a perfect opportunity for you to add MJE to your investment portfolio. Over to Chairman Berry. What attributed to the decision for the major stake in Express Catering Limited over the last quarter?
Well, Express Catering was hit very hard during the COVID era, and the stock price fell very low. So we just thought it was a great opportunity to get some more Express Catering. I mean, if you have been through the Mayberry airport, you will see the tremendous job that Express is doing there. And we think it's going to be positive to the bottom line.
Okay, thank you for that, sir. To Mr. Peart, given the current economic conditions, what is the outlook that you have for MJE and further acquisitions or disposals considered?
MJE is in the business of buying and selling shares at different points in time. So you have highlighted some of the purchases and disposals. The chairman just spoke about ECL. The biggest issue impacting MJE, which fundamentally is impacting the stock market, is the current level of interest rates. So obviously, if there's a prediction that interest rates are going to trend lower, then MJE will more than significantly outperform for 2024. If interest rates maintain or slightly go higher, the probability is that the results might not be ideal. The only thing that can change is a material change, whether positively or negatively, in the results of the companies in the portfolio. We see several companies lined up that is likely to give results that is much higher than what we've seen in the market average. Express Catering is one such company. They're rebounding after COVID, and the company took on a certain amount of debt to survive COVID. And so they're going through a process where they're refinancing debt at lower interest rates and taking on more money for more investments. So I think as you go through 2024, the underlying profits from that company, we would expect those profits to increase and increase materially. There are several other companies within the portfolio and also the exchange that we expect to do better in 2024. So if the companies are doing better, and if you see a slight reduction or even maintenance of the current interest rates, we expect the portfolio to do materially better in 2024.
Thank you for that, sir. Totally agree. Chairman, we would have seen a reduction in our net operating income. However, the total assets for the company remain strong. What could we just share for those who are fearful of, adding the stock to their portfolio and to boost that confidence, seeing that our NAV is good, the asset base is strong?
Well, so the thing is if you track the returns on equities over any period exceeding 5 years and you track the return on fixed income, you're going to find that the return on equity is much higher. The problem with buying equities is the issue of timing. So unless you resign your job and you're just sitting around and trading, then most people won't be able to time the market to take advantage of the upswing in the equities market. So you want to buy something like MJE, which is managed professionally over the long term to give you a good long-term return. So last year, for example, MJE outperformed the JSE by about 11%. And our market fell 30-some%, and we were, 11% less. So we were preserving capital even in a down market. And of course, we took the opportunity to snap up some bargains while prices are low. So when the market turns, you're going to see most likely a very strong uptick in the price and the net book value for MJE.
Thank you for that, Chairman. And I agree 100%. Sir Peart, on our Q3 analysis, I remember you predicting that there was a high probability that NCB would announce dividend payments, and you were spot on the money. What would you like to share for our dividend investors?
I'm happy that that prediction came through. Because I think the point I was making is when you go into a relatively high interest rate environment, you want to target stocks that not only have capital appreciation, but also a dividend stream. And, getting into NCB, what was attractive that we thought is NCB prior to the challenges they had was one of the best dividend yielding stocks on the marketplace. So investing in that company when that usual premium for the dividend is not there because people weren't expecting it, was, in our opinion, was a significant advantage for us. The new team that has come in, led by Bruce Bowen, they seem to be doing a phenomenal job. It's a different vision from the guys that were there, Patrick and Dennis, obviously. But the first benefit of it is the return of those dividends, and I suspect and hope that it's not a one-time thing and it's more of a sustainable scenario. And so we expect the usual thing from a turnaround stock, where people tend to forget the highs that the stock was able to achieve. We've been able to get it, I think, at a relatively good price, whether or not they have an APO. And I think once everything settles back down and people start to look at the underlying numbers for NCB, they realize that the stock is relatively underpriced. The only thing that I think that's left, the last barrier, is that the market has been sensitized that there's likely to be an APO. So what that does is APOs usually come at a discount to the market price. And so in the minds of a lot of investors, why do I buy on the market now at 68 or 70? When if the APO comes at 65, I can get a cheaper price. So, the issue with that is, the numbers that we've been hearing that might be required for an APO, NCB has a capacity to generate that profit in 6 months. So why do an APO at all? But we're not close enough to the information to find out exactly what they're doing. All I can say is that we're happy that the dividend is back. We saw the last quarter's numbers, It seems to have turned as well. I think they did about $3 billion, annualized us about 12. But more importantly, we've seen where they've announced the sale of a subsidiary in Cayman. Those types of transactions are telling me that they're actively working on generating organic cash to reduce the necessity for an APO. And if you look on the size and the potential of what you could sell an asset like that for, if they wanted $10 in an APO, I mean, based on the sale of NCB Cayman, it might very well fall to 8. And who's to know if they're selling other things? Maybe, as I said to people, if you wake up one day and there isn't an APO, the prices where the stock is trading now are very attractive. But let's see. I mean, we have taken the risk. We've benefited from the first aspect of it. So let's see if we get the second part.
Yes, and I definitely believe. Go ahead, Chairman.
A follow-up on NCB for the listeners. So in the last 12 months, NCB hit a low of below 65. And it's bounced off of 65 and it's low 3 times. I know if you look at the chart, you can see it's clearly headed up to 70. There's really not much overhead on the stock when you look at it from a technical basis until it gets to about 75. So I think the market is definitely showing some confidence that there's a turnaround in play. We just have to wait now to see the performance fill in and see what happens to the stock price.
Awesome. Thank you for that, Chairman. And just one last question for you, Chairman. You have grown this asset portfolio significantly. It's an active managed stock on the market, MJE portfolio. Since IPO, you've grown this stock probably by almost 100% last year. 13 point something was the share price last year, the highest, right? Where do you see in the next 2 years the stock going?
Okay, I like that question because it really gives an insight into how I see investing in Jamaica. And if you look at all the wealthiest people in Jamaica, they didn't get wealthy by saving money. They get wealthy by investing in businesses. And when you invest in a business, you work very hard to produce a good outcome, but you're not in control of all the factors like, the monetary policy of the BOJ, possible competitors, external factors outside of Jamaica. But when you take all of that into consideration, you are still gonna get a much higher return than putting your money in the bank. So our philosophy is that we try to pick companies that are going to grow at the same pace or faster than the economy and have relatively good management and honest management. And that has done us well over time. We started MJE with a small amount of money. It's around 10 million US, and today it's close to 150 million US. So you can see that the formula works. So that will be my answer.
Appreciate it, Chairman. Any last words for us, Mr. Peart?
Yeah, that's the usual thing. I mean, it's the only stock you need to own. We take the stress out of it for you. The track record is there. You heard the chairman indicate that we started with 10 million US somewhere around 2006. It's in excess of 100 million US now. We're actively, tracking the bonds based on information that you've seen. And, when you look at a long-term graph, again, equities versus US dollars versus real estate, equities way outperforming, So, I leave people with a point, when people ask me the question, in the last couple of quarters, you've reported losses. And we said it's a good time to acquire certain assets because you're not able to get them at that point in time. 4 years ago, NCD was trading at 210, 230, I believe. And, people were trying to acquire the stock at that point in time. So, seeing the same company that, yes, you've had some senior level issues, but fundamentally the company isn't broke. Trading at 65 to 70, it's a no-brainer.
It's a no-brainer.
So what people have to get away from is that your wealth doesn't disappear in 3 months, right? I mean, that's why we diversify and we invest in the way we invest. So, that is, I think if you track any stock in a portfolio at this point in time, that is going to be one of the best stocks for you to tell the story of MJE. Because when we started to acquire the position, a lot of people were scared to buy NCP. We analyzed it, we saw what the situation was. We didn't know the exact time and the low that it was going to go, but I can promise you, if what we think is going to happen happens at NCB in a year's time, I think you'll be challenged to get that stock below $80. So that's why you buy MJE. We're gonna see these opportunities. It's over 100 years of combined management between Chris Mark and myself. We brought that to bear for you. So no other stock you need to own, MJE.
Wonderful. Thank you, gentlemen. That's it for today's discussion. I'd like to thank our viewers for tuning in. Big thanks to the panel, Chris and Gary, for making this a great discussion. If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow to learn all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe and remember, wise investors, slow and steady wins the race.